Are you struggling to spot high probability trade setups? Let me introduce you to a game changer: fair value gaps and breakaway gaps. What is a fair value gap? A fair value gap is a three-candle price imbalance. When price moves aggressively in one direction, it leaves a gap between the wicks of the first and third candle. This signals institutional activity and a possible retracement point. How to identify a fair value gap? Here is how to identify fair value gaps. The second candle must have a large body, showing strong displacement. The wick of the third candle must not overlap with the wick of the first candle, leaving an inefficiency. The third candle should not close beyond the high for bullish fair value gaps or low for bearish fair value gaps. Usage of fair value gaps. Fair value gaps are powerful tools. Internal range liquidity. Price often retraces to test them before continuing. Confluence for entries. Fair value gap inside a higher timeframe point of interest strengthen trade setups. Breakaway gaps. A breakaway gap is a special type of fair value gap where the third candle closes above the high, bullish or below the low bearish of the second candle, confirming for momentum in order flow. How to identify a breakaway gap? Key traits of a breakaway gap. The first two candles form a fair value gap structure. The third candle closes beyond the high, for bullish or low, for bearish of the second candle, confirming strong momentum. Usage of breakaway gaps. These gaps serve two major purposes. This kind of a gap represents the momentum confirmation. A breakaway gap signals strong smart money commitment. Continuation entries. If price retests the gap, there is a high probability that the gap will be filled. Key difference: the fair value gap versus the breakaway gap. Here's the difference. Fair value gaps. These are price inefficiencies. They are likely to get revisited. Breakaway gaps. These are stronger type of fair value gaps confirming directional intent. The fair value gap indicator. Your edge in trading. Manually marking these imbalances is time consuming. That's where our indicator comes in. Why this indicator is a must-have. Here is why traders love this tool. No more guesswork. Automatically detects FVGs and breakaway gaps. Enhances market timing. Know exactly when price is likely to retrace or confirm momentum. Perfect for ICT traders. It aligns with smart money concepts. Works in any market, from forex, indices, crypto, stocks, you name it. Level up your trading with the fair value gap and breakaway gap indicator. How to use or read the indicator. Here's how to read the indicator in live trading. Reading bullish. The bullish fair value gap's color is Dodger blue. The bullish breakaway gap is spring green. Reading bearish. The bearish fair value gap's color is tomato. The bearish breakaway gap is crimson. Trade management. If price retests the fair value gap that is aligned with the bias, it can provide a high probability entry. Direction. If price prints breakaway gaps, it shows the momentum to the direction of the breakaway gap, and if prices pull back to the breakaway gap, the breakaway gap is likely to be filled. Get precise fair value gaps and breakaway gaps and create a strategy around that information. Save time and trade smarter. Let the indicator do the work, so you can focus on execution. Grab your copy now on MQL5. Check the link in the description. Let's get these pips in the bag.